Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, the U.S. Fed has cut interest rates. What are they trying to do?
They're trying to save this market. They're trying to hold it, so because I think it's easier to hold than it is to to stop it once it begins. So I think the Titanic is taking on water, and it's the bilge pump. If it short circuits, then who knows? But I mean, definitely trying to hold it.
Now, can they?
Well, that's the question. I mean, so far they have done an absolutely magnificent job at holding, extending this thing. No question about it. That's how we got here. That's what created the bubble. That's why that this extended top has taken so long. Looking back since January 2018, when this top first began trying to form, we've oscillated above and below that level now for five times, and we've gone nowhere, kind of treaded water. But yes, they've done a terrific job at holding this, and I think a lot of that has come obviously from just the jawboning, the targeted news we've talked about with the tweets on the China deal and so on and so forth. I mean, hit it with every angle. The declining interest rates and this latest round of non-liquid or non-QE QE.
And what's the deal behind the non-QE QE? And again, what are they trying to prevent?
Well, I think they're trying to hold this thing. I think they realize the risk because the setup and the warning signs. Technically, they're there. I mean, I don't think we've talked about this so long with the enormous bubble. There's a lot of people talking about it. A lot of people don't believe it anymore. I guess a lot of people think it doesn't matter anymore. But I differ from that. I mean, I think it's pretty obvious the situation that the market is in and the technical underpinnings of the market, but they continue to manage to hold it. And that's, I guess, what's created the complacency, doubt, and has been so discrediting for anyone talking about it. But, last October, going into last October, I guess I should say, if you'll remember, they were raising rates. And then in October, in my world, there was a 3-year cycle low in bonds, and that was like a brick wall. And then come November, December, they started doing an about face on their policy. And remember, everybody's talking about how the Fed got dovish and so on and so forth. And then as short-term rates began to decline, eventually it forced them in July, I think, was the first cut. But the first half of this year, rates were down, and we saw the inversions of some of the yield curves and that sort of thing. And I think that was a sign of the liquidity problems that finally surfaced here with the need to do these repos in the non-QE QE.
Now, of course, they're spending billions every month on this non-QE QE. I don't know what kind of name we can give it apart from that. Is that money worth it, or should they just let the markets go where they want to go?
Well, I've always, when you say free markets, I've always felt that the markets need to breathe. I mean, it's good to get a breath of air, but it's also good to exhale. I mean, you need both. And to have a healthy market, you need both. And that's how we got here in the first place, Jim, is these markets have not, not to digress too far, but, it all kind of began back in, we were 19 years into this. We had the dot-com bubble back in 2000, and the market tried to crack a little bit there to that 2002 low, and it did. That was a pretty natural little correction. But then where it really got out of hand was coming out of that low. They extended, that was, as I recall my statistics now, that was the most extended 4-year cycle advance in history, going back to 1896, and that was because of the monetary policies to extend that. And why they didn't just let the market correct, I don't know, because if we could have just exhaled there and got a good correction, I think things would have been different. But, they just blew it up into the bubble that it was and created the worst crisis since, the Great Depression. Well, then, following that, what do they do? More of the same, but at a factor of, 100 or 1,000 or whatever. I mean, we have, the largest bubble in history because of that. And so, yes, I know this has been going on. I know we've been talking about it a while, but it doesn't change the fact that it is what it is. It's just, a ginormous bubble, and they have managed to hold it through these policies and the things that we're seeing right now with, this non-QE QE. Just an extension of the extension of the extension.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. I'm speaking with Tim Cyclesman Wood. Tim, the long-term interest rates, which had inverted a short while ago, now seem to be higher than the short-term rates again. Does that mean the danger of a recession is off?
No, I don't think so. Not at all. I don't see it that way. Short-term rates, and that I don't know how that's going to end up. Maybe it reinverts. I'm not sure, but I don't think so because all the other underlying factors are still there. The longer-term cycles in interest rates are still down. We still have the leading economic indicators that are not looking good. We still have the leading sectors that's still telling us that there's a problem. And then to go back to this non-QE QE for a minute without getting into too many of the details, but every time right at the top, when the market was just a couple of days, 2 or 3 days off of the top, they first announced that they were going to do, when I say top, I'm talking about the September top. They first announced on the 17th that they were going to do repos tomorrow. And then the market weakened for a couple of days, and then they announced, on the 19th that they're going to extend it. And then, it just kept growing. And the market would respond a day or two, and then they're getting very little bang for the buck. And the fact that they're doing it here at a top, I think it is telling. I mean, I don't obviously know, but the evidence suggests that they are very much aware of the risk here, and I think that it's easier to try to hold it, continue the levitation, if you will, than to let it crack, because I think it'll be a much, much harder to stop it once it cracks. So I think that's, probably what is happening here. Can they hold it forever? No. How long? I don't know. I mean, who would have thought that we would be where we're at this far down the road? But no, I mean, nothing is forever. And like I've said before, there's no bubble in history that's ever not popped. And this one will, at some point, there will be something that will, out of left field, something's going to surprise the market at some point, and they're not going to be able to maintain it. And that's what makes this such a risky environment.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your outlook for gold?
Well, with gold, I do think that the advance that we've seen this year is counter trend, but as of on October 1st, I had an intermediate term cycle low in my world, and I have said that if gold is going to prove that this time is different, that this is not just a counter trend advance, that it would happen coming out of this intermediate term cycle low. And as of right now, it hasn't proven that, but it hasn't, but it's held that low. So the opportunity for gold to prove that, yes, this time is different and that the advance we saw was real and that we have a breakout, it's at hand. The test is at hand right now. So I need to see what happens with this intermediate term low. If it can't hold, then I think we have a failure and we have our answer. If it does hold, then, hope is still there for the gold bugs that, gold goes higher. I guess maybe I do have a little bit of a bias because of the data. I can't help that, but it should be counter trend, and my expectation is that it doesn't hold, but we'll see. Like I said, the October low is the line in the sand for me.
Will the drop in U.S. interest rates also lower the U.S. dollar?
You look at some of those. You look at some of those relations. I like to let every market stand on its own 2 feet, because if you just simply do overlays of charts, sometimes you see relations that appear to be there, and then other times they don't. So I hate to draw that conclusion. On the dollar, what I see simply is that we're at. Let me back up. I forget the timeline now, but a year and a half ago or so, I think it was February of 18, we had the longer-term cycle low there, and we talked about how the dollar would be, the surprise for the year, and it would be, strengthened, and that's still intact. That longer-term low is still moving up, and shorter term, we're at or near an intermediate degree low. There may be one more push down into it, but we're at or near an intermediate degree low. And then I think the direction for the dollar is still higher at this point. There is a 4-year cycle top out there, but I see no evidence that we're there yet. So I'm still bullish on the dollar when I let it stand on its own 2 feet.
Crude, is it going to go up or down?
Crude continues to levitate with equities. It's kind of the same thing. Crude, the CRB index, which is, a basket of commodities, it continues to levitate as well. The magnitude of the cycles are different, but the cyclical pattern is very similar with crude and equities, and it's all kind of levitating. That said, when you look at raw materials data, when you look at some of the oil indexes and so forth, and you see that the historical relationships, it overwhelmingly suggests that the advance in oil is counter trend. And so until I see evidence to the contrary, which I haven't seen. I mean, yes, it's holding, but it hadn't gone anywhere. I think this is counter trend, just like we're seeing pretty much with equities, and that when the deflationary forces finally take hold, I think oil goes down, just like it always has with raw materials.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.